Hello, my name's Sally Flett and I work for the EFA's Risk Analysis Division. Our division oversees the financial management of the academy sector and provides assurance over its use of funds. We also work in partnership with academies to develop the financial accountability framework for the sector. The purpose of this session is to give you, either as accounting officer or auditors, an understanding of the regularity framework. We will discuss the framework surrounding regularity and what are the key changes for this year. Please note that this session will focus on the practicalities of regularity. Please cross-reference to our other presentations as follows. The severance payments presentation to gain an understanding around the approvals process and what constitutes a good and bad case. The financial statement outcomes presentation as to what were the main causes of modified regularity reports last year. And finally, the financial handbook for items which will impact on the future. Before delving into what regularity actually is, it is useful to mention the underlying framework and who is interested in regularity of academy trusts. Firstly, the Academy's financial handbook details the principles academy trusts need to adhere to. It also sets out the delegated authorities, which will be discussed later on. The Academy's financial handbook draws from the HM Treasury publication Managing Public Money. HM Treasury approve the relevant delegated authorities and have a very close interest as to how and what academy trusts are spending their money on. We provide information on how to review regularity within the Academy's accounts direction. Finally, the National Audit Office require the regularity report as part of their own audit work on the EFA and DFE consolidated accounts. They do pay attention to those instances where assurance reports are modified and also discuss regularity work with auditors. So, what does regularity and propriety actually mean? They are discussed at length in Managing Public Money and the handbook. Parliament is concerned that public money is only used for approved purposes and regularity requires a transaction, whether income or expenditure, to be in accordance with the relevant framework of authorities. Propriety is more concerned with the standards of conduct, behaviours and corporate governance. On the slide we've detailed some considerations that the Academy Trust should have, which do come down to acting fairly and with integrity. It's making sure that wherever expenditure is made, individuals connected to the Trust do not benefit personally, and value for money is demonstrated in the avoidance of waste and extravagant purchases. This slide summarises the various delegated authorities an Academy Trust has, as stipulated by the handbook. Please note that severance, compensation and ex gratia payments are discussed on our specific severance payments presentation. If a trust has a transaction that exceeds the delegated limit or a specific type of payment, for example, disposal of land or a novel and contentious payment, you must seek approval from the EFA in advance. To do this, you should submit a business case setting out why the transaction should occur via the EFA inquiry form in Information Exchange or on gov.uk. We'll then review the case to determine whether it should be approved. You should keep the outcome of the review on file as evidence for your auditor. The reporting accountant will test compliance with the handbook and confirm that you've sought the necessary approvals. If during the course of the audit evidence suggests due process has not been followed, this will either need to be documented within the auditor's management letter or lead to a modified regularity report. The accounting officer has a personal responsibility for all resources under their control. It may be that some of these tasks are delegated to your finance staff on a day-to-day basis, but overarching responsibility is with the accounting officer. A standard declaration is required and the wording is shown within the Coketown model of the accounts direction. Where any issues have been found, they must be shown firstly within the accounting officer's statement, with any further information in the reporting accountant's regularity report. Please note that we require the issues to be split between those that affect an underlying financial transaction, for example, where a fraud has been perpetrated or a transaction has not been at cost, and other issues, to say where there are weak internal controls or deadlines have not been met. Work to inform the statement should be done throughout the year and not just at the year end. Part 9.2 of the Accounts Direction helps direct the accounting officer as to the checks they should be making. The accounting officer should also be looking at Part 9.4 for the potential lines of questioning from the reporting accountant. Whilst we do not mandate the accounting officer keeping a file of evidence for the statement, we do believe it's useful for everyone involved if one is maintained. It may make the audit easier, as the reporting accountant can easily see what work has been undertaken, and it also focuses the mind on any issues at hand. Finally, the accounting officer should notify their reporting accountant at an early stage where they have been part of an investigation, whether anything has been found or not, or where they have received any minded to letters, specifically where there are concerns over financial management or governance. The auditor, as reporting accountant, must review the evidence underpinning the accounting officer's statement and confirm whether anything irregular has come to their attention from the work they've undertaken. We expect the regularity work to be an extension of the true and fair audit of the accounts and not a separate engagement, and tests should be developed as appropriate. There has been no change to the level of assurance required, which has been confirmed with the National Audit Office. To assist you, we recommend reading the International Standard on Assurance Engagements, ISAE 3000. The document details the expectations on an engagement and defines what limited assurance actually is. And it should be noted that regularity is an implied assertion in accordance with Practice Note 10. Auditors should look to extend their sampling to record whether a payment is regular and proper, and if they note any issues, look to increase the sample size to satisfy themselves. There are a number of issues which reporting accountants should consider. These may be of interest to trusts to expand their knowledge and understanding of the audit process. New academy trusts may have an accounting period of more than 12 months. If this is the case, more than one version of the handbook may apply, and there may be tweaks to testing due to when the transaction was undertaken. Risk assessments should be revisited each year to inform work plans. A change in the senior leadership team or governing body may alter the attitude taken to risk. If there are new accounting systems, this may trigger a change in the risk profile determined by the level of security. Finally, if there have been more academies brought into the MAT, attentions will need to be focused on how the change has affected the overall scheme of delegations and the responsibilities the constituent academies have. We've mentioned in detail the delegated authorities afforded to trusts. We see any breach of these as material, irrespective of the value attributed to the breach, and our expectation is that these would be included in the regularity report. One of the stipulations of the handbook is for trusts to have a system of independent checking. Options include an internal audit function, trustee, or peer-to-peer review. Any reliance on work already performed must be critically appraised as to whether it would give a benefit to the overall audit process. The auditor's management letter should also be used to document regularity issues, and we would expect to see a grading of the severity of the issue, coupled with a recommendation and response from management. So, what are the main changes you need to be aware of for this year? For 2014-15, there are no major changes to the level of assurance, which has been confirmed with the NAO. However, we have undertaken some care and maintenance, providing information based on feedback from the sector on what would be useful additions. For example, subsidiaries, teaching schools and connected parties. These can all be found fairly early on in the guidance. There have been a few tweaks that will affect the reporting accountant. Firstly, we have sought to limit the liability cap to £5 million in aggregate. Standard liability terms are £1 million per academy within a trust. However, this is capped for multi-academy trusts with more than 5 academies to £5 million. We hope this reduces the need to agree exceptional terms with us. Secondly, reporting accountants are to contact the EFA where they have a specific inquiry on an academy trust, instead of a general sweep on any of their clients. The accounting officer should be telling the reporting accountant of any instances where they are under review or investigation and where they have been issued with any formal letters, so any issues will be flagged up early. Finally, where a regularity report is being modified, the reporting accountant should inform both the EFA and NAO before the accounts are submitted. We hope that you are familiar with the reporting deadlines by now, and there has been no change to these this year. However, please note we have changed the route by which you should contact the EFA. We have now moved to an online form accessible both through Information Exchange and on gov.uk. The form is very easy to use and should be completed when informing us of the intention to prepare dormant accounts or extending your first period of accounts. We hope this training has helped you to understand some of the key requirements of the regulatory framework. We will be running 2 live webinars on the 10th of July where you can raise questions about any of our financial framework presentations. The morning session from 11 AM is for Academy Finance staff, and the afternoon session from 2 PM is for auditors, as we realise there may be different aspects that you'd like to focus on. You can register for the webinars by clicking on the link on this slide. If you have any questions between now and the 10th of July that you would like us to cover, you can submit these in advance at the registration page. We'd like to end by thanking the stakeholder group of Academy representatives and audit firms that have helped us to develop the regularity guidance this year. Thank you for your time.